Welcome back to America's Retirement Headquarters, the home of the Retirement Guys Formula, America's Medicare Associates and Retirement Tax Partners with Nolan Baker and Scott Kersner. 419-794-3030 is the phone number. It's 419-794-3030. You can also find out more about the team, the Retirement Team Action Plan. Set up a time to speak with them on the website. That is arhq.com. Don't forget, the show is available via podcast on YouTube, Apple Podcasts, Spotify, wherever you consume your media. You can check it out at your leisure. Just search for America's Retirement Headquarters. It'll get you where you want to go. So you may have noticed egg prices. We won't get into it a lot, but there's a shortage. The bird flu has hit the nation's poultry industry pretty hard. And as a result, a lot of restaurants are passing on the higher cost. Waffle House, for example, they surprised customers, myself included, last month with a 50-cent surcharge per egg, 2 eggs, extra $1. It's very clearly displayed on all their menus. You know ahead of time you're going to be paying more. But let's turn this around. Let's talk about unseen charges that people may be paying on their finances, like hidden fees in investment accounts or excess premiums in healthcare or Medicare. Isn't it this case of, what people don't know could, in fact, be hurting them when it comes to their retirements?
Oh, I mean, it's such a costly mistake, really, to have these hidden fees and expenses. And it's the cornerstone of what we do here at America's Retirement Headquarters. When we provide you that retirement team action plan, what we're going to do is provide you that 2-page summary report. And within that report, we're going to break down the area of taxes, estate planning, asset protection, and money management. And we're going to look for hidden fees in all of those areas. The first one, the T in the team, talks about taxes. And I think about taxes for retirees, it's the issue of Social Security taxation. So most people are surprised to find out that they could have up to 85% of their Social Security benefits become taxable when they retire. The issue of what happens when one of the two loved ones passes away, and you ultimately get what I would refer to as a widower's death tax, because they're not filing joint tax return. They're an individual. There's different tax brackets. You have the potential of higher taxes in the future. On the money management part for taxes, I can remember an example from several years ago of somebody who had given us a call, and these people retired. They were getting health insurance on the Affordable Health Care Act. They did not realize that some of the other income that they had was considered countable income.
Right.
So affordable healthcare, what happens is you go to healthcare.gov, you put in your income sources, and you put in what your expected income is, and then the program will come back and it gives you an estimate as far as what your health insurance is going to be. Mm-hmm. You select the plan. But what happens when you file your tax return the next year, Scott?
Well, you get a 1095 at the end of the year. And the 1095 shows if you've received a premium tax credit based on your income. If that income changes throughout that year and you do not log in and change or update, whether it's higher or lower, you will be surprised to get a hefty tax bill at the end. If you are reporting lower income and for some reason you take money out to maybe do that fun vacation you've always wanted to do, or if you want to remodel or make some updates to the house, if you take it out of the wrong account, it could be a reportable income, which could severely impact your monthly premium for one, and your tax bill at the end of the year. If you estimate low and you make more money, you have to pay back the difference in that premium tax credit.
So is it not true that if it's just maybe even one more dollar over what the threshold is, it could be thousands of dollars that you owe in taxes in that particular situation?
Oh, there's no question. If let's say that you're receiving, $500 a month in a premium tax credit, and you have $1 over the threshold, then that's 500 times 12, which is $6,000 at the end of the year you've got to pay back.
So a lot of people, they work with a financial advisor, they get their money, they get their withdrawals, but they never really look at it from a tax perspective. And it's not really until they're found out that they meet with their accountant or CPA, get their taxes prepared, that they're, all of a sudden owe this huge tax bill. And by that time, it's too late.
It is too late.
That's, again, the Retirement Team Action Plan is we're taking a look at it in a comprehensive way. We can bring in retirement tax partners where we can do some what-if analysis on your taxes. The second area that people run into is estate planning. A lot of people will come in and they say, Nolan, I don't have millions of dollars. I don't need to do estate planning. But if you have a retirement account, taxes have not been paid on that retirement account. Taxes are going to be due at some point in the future. This, again, is another area that kind of overlaps each other. So sometimes it's better to do things like proactive Roth conversions before you collect Social Security. That can come back to benefit you later in life with having the potential of tax-free money and help you maybe create a better estate plan that can leave more money in. Asset protection, we talked just a minute ago of as far as $1 can really kind of blow things up as far as the income limits for affordable health care. But the pain doesn't always stop just at affordable health care. You think, well, I get to 65, it's easy, I just transition. What are some of the, costly mistakes and fees and expenses that can come in with Medicare?
Well, I have a real life example in this one. I had a gentleman, actually, he is working with both of us. He retired actually from a automotive, one of the big three. And he calls me up a couple of months after I signed him up for Medicare, and he says, Scott, I'm not sure what's going on here, but my Social Security check, they were taking out $1,100 more than what we originally calculated. And I go, $1,100 more? What? I'm not sure what's going on here. Something's not right. So he brings in all of the paperwork he received, and one of the documents he received from Social Security Administration was his Part B premium. Now, what happened was him and his wife. This is a great story for every one of you listeners out there should be listening and paying attention to this. He filed separate. Married, filing separately, okay? Well, there's a specific line item on your Medicare Part B premiums for married filing separate. And the income threshold is drastically different. And it's $106,000 up to $399. Well, he fell in that area, and his Part B premium was $406.90 a month for the IRMA, which is the additional income, on top of the $185. He ended up paying $670 a month for Part B premium. He was totally unprepared for this, totally shocked, had no idea that this was going to happen. The crazy thing was he was $240 over the threshold. It was $106,240, which bumped him into that extra bracket, which cost him over $500 more a month in premium for Part B. He had no idea, and wasn't prepared for it, and drastically impacts what he's going to do over the next 12 months.
Oh, massive tax increase there, just simply by not understanding how that health insurance can impact either affordable health care and Medicare. And the fourth area, when we look at fees and expenses, is money management. It's oftentimes when people come into the office that they have a money manager. In this case, oftentimes they're paying a money manager a fee of anywhere from 1% to 2% to manage their portfolio. But, when I do an analysis, most investment companies typically are then working with a third-party money manager. Mm-hmm. So they're shipping it out to some other company. This other company is a third-party money manager. That third-party money manager is charging a fee and expense. And then they're ultimately buying either funds or ETFs. And so you have these mutual fund fees and expenses or ETF costs that's associated with it. And basically you have cost after cost after cost after cost. Our approach here at Retirement Guys Formula here in America's Retirement Headquarters is when we do a stock analysis for a client, if we look at a stock and we believe a certain basket of stocks are what we believe to be best for our clients, why not just buy that stock directly and try to cut out some of those other expenses? Oftentimes, we also see people who have things like variable annuities, or they have some of these private real estate investment trusts or business development corporations. And again, it's not one size fits all that's right or wrong for everybody, but, some of the times those fees and expenses are not adding value in that relationship. And I think that's one of the values and one of the reasons why people love working with us here at America's Retirement Headquarters, because it's one location to have everything taken care of. Imagine how much different your life could be if you could just get 20% more in some of these areas, or if you could cut out 20% of fees and expenses, or you can avoid some of those blind spots that Scott was talking about when it comes to, your taxes for health insurance or your excess Medicare premiums that you pay. And the way that you can do that is to take advantage of that retirement team action plan. A very easy way to do that, go over to our website, arhq.com. You'll see right there on the home screen to sign up for that complimentary retirement team action plan. We do that for the first 5 callers from our show every week if you have more than $250,000 saved up. And we'll put together that 2-page report that talks about how to avoid those hidden fees in your retirement plan.
Chris, it's you were talking about at the opening of this segment about the eggs. The only good thing I'll say about that is I don't eat eggs. I know I should, but I don't eat eggs, so I'm not really recognizing that. But I can tell you what, my wife does, and I hear about it every day.
I have no doubt. Whether it is paying more in fees, paying unnecessary fees, higher Medicare premiums, market volatility, what have you, it boils down to less money in your accounts, less money you get to utilize for whatever it is you would want to do. If you have a proper plan in place, you can minimize those, if not outright eliminate some of them. And that is where that retirement team action plan comes into play. Find out more about it, set up a time to speak with them, and have that complimentary retirement team action plan put together for you, arhq.com, or give a call, 419-794-3030. It's 419-794-3030.